Hello everyone, welcome to the Currency Buzz. This is Gaurang Somaiya, your FX analyst. So this time we'll be doing the review for the month of April and the outlook for the month of May. But before we go ahead, don't forget to like, share and subscribe to our YouTube channel. First, starting with the domestic pair, that's the dollar rupee pair. We have seen that in the last few weeks, it has been consolidating in this range of 82.80, 83.50, 60 on the higher side. And that again has been on back of quite a bit of active intervention from the central bank. We did see the RBI in its last policy meeting keeping rates unchanged. We also had the FOMC policy statement wherein here the Fed also continued to keep rates unchanged for the sixth consecutive meeting. In this month, that's in the month of May, we are going to keep an eye on the inflation and the industrial production number on the domestic front. And on the global front, we'll have a few important numbers to watch out for. We expect that this volatility is likely to be confined in this range of 83 on the lower side and 83, 60, 70 on the higher side. And not much of a move is likely to be seen. On the domestic front, we also have the general elections, which will be in focus. So the result of the same will be released in the first week of June. So we are likely to see a bit of impact also coming in from that front on the dollar rupee pair. Now talking about the global currencies, so we have seen that dollar index in the last few weeks has been getting support at lower levels. So there has been a couple of reasons which is leading to these gains in the dollar index. So first has been the escalating geopolitical tension. So that again has led to a bit of safe haven buying in the currency. Second, we had the FOMC policy statement wherein the central bank continued to keep rates unchanged for the sixth consecutive meeting. They continue to raise concerns over inflation. They did mention that they are moving towards that 2% inflation target, but the focus on being data dependent has been reiterated in the commentary. In this month, we will be keeping an eye on the few important economic numbers that we release from the US. First, it is going to be the non-farm payrolls number, the retail sales number, the core PC index, which the Fed keenly eyes to gauge the inflation or trajectory. And these numbers are likely to be a base case for the Fed to determine further rate decisions in its upcoming meeting. And the broader range for the dollar index in this month is likely to be 104.80 on the lower side, and on the higher side 106.20, 106.50 could be an important resistance zone. In case of the other major crosses, we have seen that euro and pound continue to trade in a narrow range. Volatility overall has been triggered because of the strength in the dollar index, but nothing major as such has been impacted from the economic numbers that came out from the eurozone or the UK. If we look at the Japanese yen, that has been continuously under pressure. Even after the Bank of Japan policy statement, we haven't seen much of a respite coming in. There have been some bit of announcement coming in on intervention from the BOJ, but the weakness in the Japanese yen continued in the end of the month as well, and we expect this to continue in the month of May also. So our view in case of the major crosses for euro and pound is slightly sideways, and in case of the Japanese yen, we will continue to maintain a slightly bearish view against the US dollar.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.